This is looking really good for Tesla stock. In fact, this might be the best or some of the best news for Tesla stock this year. Wall Street Journal says that after a brutal year for tech stocks, retail investors have lost their appetite for buying the dip. With one notable exception, they are still scooping up shares of Tesla stock. Retail has spent more money on Tesla stock in the past 6 months than in the past 5 years prior. And then look at how crazy this chart is. In blue, this is tech, and it fluctuates, and it's really down, but you can generally see that with Tesla stock, the trend is generally up, especially recently. And around here is July. What happened in July? Tesla stock was on sale, and retail Tesla stock investors, when they see Tesla stock going down, they understand eventually it will go up. That's at least what they think, so they buy, and they buy a lot. And you can see roughly as the stock went up, people started buying less of Tesla stock, but then the more it goes down, the more retail Tesla stock investors buy. And in January, net purchases hit a one-day record. If Tesla stock keeps going down, I think it is not unreasonable to expect that retail Tesla stock investors would be buying perhaps even more. This makes Tesla stock a little bit unique because there is strong support for Tesla stock. Retail investors, they will flock in. We are not disturbed by short-term ups and downs. We are really concerned about the long-term well-being of a company, but we are not that worried about short-term bad news, one bad quarter, two bad quarters. We are concerned about what is going to happen 5 years from now, 10 years from now. Because of the spectacular growth that Tesla is experiencing, Wall Street Journal is reporting here Tesla is the last stronghold for investors buying the dip in tech stocks. And it almost seems that the mainstream media is becoming more positive about Tesla stock. Look at this headline. Tesla's demand problem may turn into a key advantage if Elon Musk's strategic poker move pays off. I mean, it doesn't say Tesla's demand is collapsing, therefore Tesla cut prices. This article recognizes that there is a strategy component to the price cuts. The moment the mainstream figures out how good Tesla stock is, the buying opportunity is going to go away. Now, the article is still somewhat negative, although it does have some positive points, like right here, price slashes and pile-up inventory at Tesla pose a big problem for rival startups. More good news here. Fed sets course for milder interest rate rise in February. If you want Tesla stock to go up and all of the growth stocks and tech stocks, you want the Fed rates to be as low as possible. And you can see, for example, here, previous day, we were expecting that this rate had only a 33% chance of happening, but now it's at 40%. And generally, each time, not every time, but a good number of times when I check this, it looks like the chances of interest rates being higher and higher are lower and lower. Now, of course, if you look at the data, it has some ups and downs. If you look at the previous week compared to previous day, it's not a smooth ride, and certainly bad things could still very well happen. But so far, we are making some good progress there. More good news here. Tesla listings on CarMax.com have declined by a whopping 85% in just 8 days. An unprecedented decline for any single brand. Either discounted Teslas are flying off the shelves, which is what I believe is happening, or CarMax is selling these to other dealers. And looking at the comments, most seem to think that indeed they are flying off the shelves because people are actually buying them. This here suggests that the demand for Tesla vehicles tripled. Take a look. Soon after Tesla's recent price cuts, applications for New York startup firm that provides financing to EV buyers, applications for financing for Tesla vehicles tripled. And it does not seem to be just one huge spike. It seems that the influx of customers has remained elevated. Looking at the inventory level for Model Y in the US, it is dropping clearly, and I'm surprised it actually dropped this much in one day, because looking at this website, I can only see at this very moment 2 Model Ys that are under $55,000, which would qualify for a $7,500 credit. Here, I just sorted it by the highest price, and now let's sort it by the lowest price again. Oh, sorry. Turns out there's only one model under $55,000 left now, and this one is probably going to go away very soon too. But everything else is over $55,000. So this drop here would suggest that Tesla will have no problem selling these remaining very expensive cars, because you're basically paying more than $7,500 just for a different paint color. You're losing the $7,500, and also you're paying extra to get that actual color, either $1,000 or $2,000. However, when we look at the Model 3, it doesn't look as nice, and most of these vehicles are under $55,000. So what exactly is going on here? I mean, when you look at this graph here before, we just cut the prices to match the EV incentive in December. So we discounted the vehicles by $7,500, and we gave some free supercharging miles as well, and the inventory just disappeared completely. We now have the $7,500 EV tax credit available, and on top of that, there is a discount, and yet the inventory has not disappeared yet. I haven't really seen anyone explain it fully and properly, so let's do that right now with a little bit of help from Tesla Daily. Rob has the best chart which will allow you to understand this very easily. So look at what you are buying with a Model 3 rear-wheel drive. $44,000 basically, okay. And you're not getting the long range model. This is basically a short range model. So really put yourself in the position of a buyer. Really imagine that you are actually considering buying a new vehicle, and what you will see, which one you will choose very soon, will become incredibly obvious. So the Model 3, you are only getting 5.8 seconds, 0 to 60, not bad, pretty good. But only 272 miles of range. I think many people feel that anything under 300 miles, if you are only driving in a city, it's okay. But if you want to do some road tripping, and if you ever drive in slightly colder weather where you really take a hit, a big hit in terms of range, it may not be the most comfortable road tripping experience. You will be fine, but you just need to be a little bit more aware of how you are driving, where you are driving. You need to be a little bit more careful. It's just a little bit, it's just extra effort. And now look at the Model Y. And I'll have a question for you. Why wouldn't you get this car instead of the Model 3? Well, when you look here, it's 1 full second faster. This feels a lot faster. The Model 3 does not feel slow, but this feels really fast. Then you get a lot more range, 330 miles of range. Quite a bit more, actually. It doesn't sound like a lot, but when you actually have the vehicle and when you go on a road trip, I was on a road trip, and when I saw the battery level at 20%, it's like, okay, I need to make sure that I know exactly where I'm going and that there's a supercharger available here. It's okay. But when that drops to like 5%, you are freaking out. You're like, oh my God, what if I run out of battery here? What if, I don't know, what if the chargers are not working there? Like, it's not a comfortable experience. There's a big difference between being at 5% and 20% right before you need to charge. So it's not so much that this extra range makes the car more practical. I mean, 270 miles is certainly enough. But what this gives you is a peace of mind. If you get this, when you go on a road trip, I don't think you will ever really need to worry about running out of range or being low on range. Whenever you arrive at the supercharger, you will probably always have 20 or even 30%. And that's also largely because you just need to take a bathroom break. If you have less range, the car might be limiting you. Whereas if you have this higher range, then you become more of the limiter for how often you need to stop. The Model Y is also a hatchback, which makes it very easy to put anything in the car, whereas with the Model 3, well, occasionally I struggle. Also, Model 3 has this thing in the middle right here, and the Model Y does not. The Y also has this filter, whereas Model 3 does not. But most importantly, the difference in price for the Model Y long range and the standard range rear wheel drive used to be almost roughly $20,000. Now, look at the difference. The difference now is only $9,000, whereas it used to be $19,000 before the price cut. So personally, which car do you think is better value, and which car would you personally choose? I think I would choose at this point certainly the Model Y. Model 3, no chance. Also check this out. This is Tesla website in China, and the cost is 229,900 RMB. That's for the Model 3 rear wheel drive. And that is 33,000, almost $34,000 if you bought that in USD. Currently in the US, Tesla sells the Model 3 for about $10,000 more. So Tesla will need to do something about this Model 3 situation, either drop the price further or introduce the long-range Model 3 all-wheel drive version. Tesla should hurry up and do that. Well, we got the redesigned Model 3 coming out probably relatively soon, although still probably multiple months away. But currently, the deal for a Model Y is so good that it doesn't make sense to go with the Model 3. The Model Y is just a better car in almost every way except in handling. And these are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Postis. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.